On today's episode, we are going to take a closer look at Affirm Holdings. The stock price is down roughly 15% as I am recording this episode, and this is one in the buy now, pay later. Unfortunately, I want to say in the past few days, a few articles have kind of come out about the buy now, pay later market that might be dragging the stock price down. But is this something investors should be worried about? Let's find out in today's episode. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a lot of great links, and also the link to my new tech channel where I will be posting soon. So let's get started. I do want to thank the Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now. All right, so let's take a quick look at Affirm. Right now it's down about 15.2% with a market cap of roughly $7 billion. Like I mentioned, pretty much the market is pretty red today, but Affirm is down a little bit more. We can see here Block, so a company in somewhat the fintech market, not completely the same thing, but we can see Block is down about 7%. Affirm is down way more than that. And I do want to say there are a few things happening in the market. First, I do want to say it's just a fear of the buy now, pay later, especially as things as interest rates and kind of consumer spending decreasing continues to go on. Here we can see an article that was published on Monday, May 23rd, where Klarna, which is a big buy now, pay later company in Europe, had to lay off about 10% of its workforce as souring economy hits buy now, pay later spaces. So we can see there is this kind of fear in this market right now, in this overall buy now, pay later service. And Klarna is a big company, right? The Swedish payment giant currently has more than 6,500 employees. So roughly they had to let go of over 600 employees. That was about a week ago. And today we had another report about the buy now, pay later market where missed payments, rising interest rates put buy now, pay laters to the test. So then we kind of, if you read this article in the Wall Street Journal, it just kind of talks about the kind of bearish reasons for buy now, pay later companies. So I want to say the first thing that's really happening with the firm, there's no major specific news that is dragging the stock price down. It's more just the overall market sentiment. And this is where I believe I'm not an investor of Affirm or any of these main buy now, pay later services. I do own Square, but I do want to say this is where the market sometimes gives opportunities. So for example, interest rates. Interest rates is something that has been talked about for, I want to say, at least the past 6 months of talks of fear of high interest rates. We've also kind of heard numerous talks of consumer spending decreasing and just kind of the overall macroeconomic shift that we're seeing at the moment. So these, in my opinion, should not be news that should push stock prices down. But now I feel we're in the opposite of 2020 and 2021. We're in 2020 and 2021. Hindsight now is hindsight is amazing, right? But every time we had good news back then, stock prices would rise no matter how big or how small the news was, right? It could be old news, it could be new news, but any positive news would cause stock prices to go up. And I believe because we were in that sentiment of a huge bullish era. Now I think we're seeing the opposite, where now any bearish news, no matter if it's something that should have already been accounting for, drags those stock prices down. And like we saw in 2020 and 2021, that kind of bullish sentiment kind of made stocks completely overvalued. I'm wondering if things like this, when we're starting to continue to go down heavily on old news, in my opinion, is making stocks a bit undervalued. So I do believe the market sentiment we can continue to see is very bearish, and I believe this is not going to change anytime soon. Hopefully, I mean, for long-term investors, this maybe not in the firm, but in general, I do believe there is great buying opportunities to kind of accumulate that portfolio and kind of build those long-term positions we've been wanting to build for a long time. So I do want to end on more of a bullish note here for our firm. I do believe the buy now, pay later has a lot of kind of macroeconomics headwinds that are going to affect it, but we can see the company in general is growing. Their partnerships, they're partnering with big players. For example, on May 31st, they partner with Stripe. On May 24th, they partner with WooCommerce, a big e-commerce in Canada. And if you look at their recent press release, you can continue to see some of these partnerships just in the past month alone. So obviously we can see this is a company that's growing. Like I mentioned, I do believe the macroeconomics might affect Affirm a little, and these buy now fintech companies a little bit more than maybe some of the other companies we might have looked at in the past. So I hope you guys enjoyed today's quick episode. Take care, have a good day, and see you next time.